talk a little bit about the number one question that we get is, Bill, does this thing do velocity banking? And the short answer is yes, it does. You see, there's a misconception out there about what velocity banking looks like. And in reality, there are four versions of velocity banking. Velocity banking, at the core of it, is the partnering of a checking account with some type of a financial account. It's called an offset account. It's some type of a financial instrument, and there are four different versions of that. The very first version of velocity banking was built in the mid 90s by a guy in Australia. It was adopted in England by Virgin Finance, and they used it, and it was checking account and a first position HELOC, and it worked well. And it was actually the inspiration for what our developers saw way back in the early 2000s as, hey, that's got something there. We see it, but there were a couple of issues. Number one, there was no technology. Number two, because it was a variable interest rate, there were scenarios where if you took a family's all of their debt and put it into this first position HELOC and interest rates moved against them, well, you could crush them financially. And so the owners of our company said, no, first position, not good. Second position, better. So checking and a second position HELOC. And it worked great. We brought that out in '04, worked great until it didn't. And when was that? Well, that was August of '08 at the start of the whole housing debacle. That was when Lehman Brothers, a venerable bank on Wall Street for 150 years, something like that, it filed for bankruptcy. It collapsed. And that started a chain reaction of banks freezing their HELOC portfolio. Now imagine if you had a HELOC, money in, money out, money in, money out, right? Well, they froze them. And imagine your horror when you wake up and you just got your paycheck, you dropped it in there and thinking, okay, now I'm going to pay all my bills, and they freeze it. That's when we came out with the third variation of checking and savings. And for most people, checking and savings works extremely well, even better than the checking and HELOC models. And for us, the beauty of the checking and savings was what? You didn't have to have a mortgage. You didn't have to have room to get a HELOC, meaning equity, and you didn't have to have a credit score to qualify. If you have a checking and a savings and you've got debt and a little bit of cash flow, MoneyMax is going to work for you. It's that simple. What's the fourth version? Well, after 10 years of development, we came out with the wealth building side, and that's where we partner a checking account with a high cash value index universal life policy to build wealth. And that's a whole separate discussion after somebody masters the use and utilization of the Money Max. They're fully in command of their cash flow and how to work the Money Max, because when you make that next step into wealth building, we partner the Money Max Pro. We upgrade you to the Pro, and we integrate it with the Index Universal Life so that the Money Max Pro can see what's happening with that life insurance policy. Now, understand, life insurance policies, cash value life insurance, two big names or types are whole life and Index Universal Life. And just know that they are complicated financial instruments. And it's very important that you don't mess up the cash flow. And that's what the Money Max does better than anything out there. It is more precise, which leads to a faster buildup of wealth inside it, and to a greater extent than what you hear out there in the discussion of that infinite banking, be your own banker, family bank design. Yes, it incorporates a cash value, a high cash value life insurance policy, and it is all about funding it. And with the Money Max, when we put them together, it works like nothing that you've seen before. Okay. So I wanted to help shed a little bit of light on the idea of, well, should I get a HELOC? Is that infinite? I mean, is that velocity banking? Is that what it has to look like? And the answer is no. And so when you look at right here for John and Rebecca Jones under the accounts tab, what you're going to see is just a checking and a savings account. And people often ask, well, Bill, should I get a HELOC or should I get a line of credit? What would that do for me? And the short answer is, I don't know. What will it do for you? Well, how can you find out? One of the strengths of the Money Max account is that you can model behaviors before you do them, before you commit the dollars or the time or the energy to do that. Okay? We call it financial forecasting. And every firm on Wall Street has the ability to do financial forecasting because they have a back room full of accountants, and that's all they do is run projections. Well, in essence, you have the same thing here. How? Well, let's take, for example, that um, John and Rebecca want to get a line of credit, and they say, we're thinking about it, but what would that look like? And so all they have to do is go right here to the New Accounts tab. They're on the Accounts tab here. Click on New Accounts, and they're going to add an account. It's a line of credit. And so all they're doing here is going to do this manually. It is a line of credit. It's not a credit card or a loan. It's a line of credit. And this is just a PLOC, a personal line of credit. Who's the lender? The ABC Bank, of course. They're our favorite. And so what do you start with? Well, you start with zero. But let's just say somebody says, well, I'm going to get a line of credit and I'm going to have a $10,000 credit limit. Well, that's fine. That's fine. And it's currently at 10% and it's for 10 years. Okay, that's great. So when you do that, and then you put in the statement dates and the payment dates, all right? And then on tab 3, you can see this option, which says don't allow transfers from this account to cover insufficient funds. On credit cards, more than likely, you want to check that. But for a line of credit, you don't. You want the system to see it, okay? In the olden days, way back when we first launched this in '04, a lot of HELOCs and personal lines of credit had minimum withdrawals. That's pretty much gone by the wayside, but on occasion you might run across that. What's most important here is paid from. How do you pay for this? And we're just going to put checking, all right? So when you save it, oh yeah, payments. Here. Oh yeah, the absolute minimum. Is anybody here? Raise your hand if you are a little confused as to why is there a minimum payment here and the absolute minimum payment here? Is somebody raise your hand if you're like not quite sure what that means. Down below on the toolbar, there's a raise a hand button. Looks like that. See that? Anybody else have that question? Come on, Sam. Be honest with me. You got it. All right. All right. See, there we go. Vernice, good to see you. Matt. So here's the deal. The absolute minimum payment is the absolute minimum that the company will take for their monthly payment. The over here, the minimum payment here is the estimated minimum payment. Now, here's a clue about any type of program out there in the world. When you see something that's not the same color, like blue, put your cursor over it and see if it illuminates something. And this is saying, hey, this is how we figure out what that payment is going to be. This is calculated. And it's typically 1% of the statement balance and the 30 days prior interest. Okay, so typically if you had like a $5,000 balance, 1% of that would be $50 plus the interest. So let's say the payment was $65. But at some point, that balance drops and drops and drops, and you might only owe $500. So what's the calculated payment going to be? It might be $8. And the companies say, no, we don't want no stinking $8. We want, and put it right here, 15. Oh, okay, that's cool. So whichever is higher is what's going to show up on the dashboard of your Money Max. Now for American Express, they're notorious for being like at $40. All right, that's because they're American Express and their interest rates don't stink, right? So that's $40. But a lot of other companies, 15, 20, 25. If you have credit cards and you have that absolute minimum, you really weren't quite sure, call the company, ask them what is the absolute minimum, okay? Absolute minimum, not calculated. That's on this side. And so if this is 15 on the right side and the calculated internally was going to be $8, you'd see a $15 here. Okay? It's whichever is higher. So that's talking about payments, absolute minimum and the calculated. All right? So if I save that, I just told the system, hey, we've got a line of credit. Great. Can I do velocity banking using the line of credit? And the answer is, I don't know. Let's take a look. You see, the Money Max will tell you right here under settings. If you go to preferences, click on that, and right at the top, it'll say which method you can use. Now, notice it just says checking and savings. Well, why doesn't it give me the line of credit option? Because the Money Max, in order to use the line of credit, it has to be a certain size. It has to have a certain level of available credit because it's always thinking ahead and thinking, what if? What if your finances go to heck in a handbasket and your cash flow goes to, negative? It wants to make sure that you're going to be protected. So in this case, it won't let you do line of credit. When you go to the action plan, do you see how it says, like right here, from John to what? Checking? Yeah. If we were doing the line of credit method, it would say PLOC. But it won't let them do that here. It's only focused on checking and savings. Why? Here again, because under preferences, you can see it says, nope, that PLOC isn't big enough. Well, how big does it have to be? Well, typically 5 to 6 times their expenses. All right. So let's take a look. Let's kind of play a little game here and say, well, how big should my PLOC be? I'm not really sure. I can go in here, click edit, and what if I change that to 15,000? Okay, you follow me so far? Now I said this line of credit is 15,000 available. Let's see what happens. So I just told it right here. You can see it right here, the line of credit. Interest rate's 10. The current balance is 0. What's available? 15,000. You follow me? So this is available. So we go back up to settings, go to preferences. Is it big enough? Nope, not yet. Well, let's go back to accounts. Let's go to personal line of credit. Change that to 20,000. Okay. Hit save. Is that big enough to allow me to use the velocity banking line of credit method? Let's find out. Now it is. How can you tell? Because there it is, line of credit. Checking and savings, line of credit. But what do you notice about that? 11.8 versus 12. What is that telling us? Well, this is showing you Money Max makes no judgments. It's just pointing you to the numbers. And what the Money Max is telling you is, hey, if you have a line of credit, you can do that line of credit, but it's going to take you 12 years. Checking and savings is 11.8. So notice up here it says 11.8. Okay, I got that. But notice the savings, 150, 395. If I click the line of credit, I want to do the line of credit. It pushes this number from 11.8. Oh, it modified midstream. But look what it did to the potential interest saved. It dropped it, didn't it? It was 150,000. Now it's 148. Not quite $2,000 difference. And it's a little bit longer. Does that mean you shouldn't do it? That's up to you. Here again, the Money Max isn't telling you one way or other because the Money Max never tells you what to do. It's just showing you this or this. So if I leave it on line of credit and I go back to the action plan, notice how before from John used to say checking. Now it's different. Now it's saying it's going to go from John to the PLOC. Remember, money coming in is color-coded green. Anytime we're talking about the movement of money from one account to another, involving interest being charged or earned, that's always going to be blue. And black is any monthly budget item. And on this simplified budget, there are four. There's food and dining, gas, phone, and down here, the everything else, the catch-all. Okay? But what do you notice? Well, the system is saying, okay, we got money here at the PLOC available. Let's put it on the MasterCard. Well, how much? 5,500. What's going to be the balance at the end of the day? If you take your cursor and put it right there, it says, you know what? At the end of the day, it's zero. Now, how do I know this is moving money from the PLOC to a debt? Because right here, this blue-green is the signal. It's like, hello, we're doing something different here. Notice, because when you scroll through the first month, the second month, the third month, look, even in the third month, there's no transfer, there's no nothing going on. Second month, there's one transfer, and blue-green is a debt transfer from one account to the debt on the right day to the right amount. It's already doing your banking thinking, right? But look at month one. Wow, there's a lot of activity. Blue, green, blue, green, blue, green. Why? Because it sees that infusion of a line of credit that has availability. And that MasterCard that charges, 20, 25, 30%. Why, if we put it in the line of credit, that's a good deal. Now, although we're paying off the MasterCard, are we paying off the debt? No, because it's going over to the line of credit. We're just transferring from one debt account to another debt account. And as long as that balance is sitting there in that line of credit, it's being charged interest, isn't it? Although it's daily, meaning it figures it out daily. And then from Rebecca, her paycheck comes into the line of credit and it pushes that balance down. And then money comes out, and then there's another paycheck, it pushes it down. That is, in essence, the line of credit velocity banking concept. Oftentimes, banking and savings is faster because we're not holding debt in a line of credit. You see, it's being charged interest. If this were, go to preferences. If John and Rebecca says, no, we're going to do the checking and savings method, here's the concept. When you see the blue arrows, that's a transfer from one account to the other. It's not a debt payment. It's just saying, hey, we've got too much money here in checking. Let's get it over to savings. When you put it in savings, it's earning interest. I'll be the first to say, yep, it might only be pennies because savings rates aren't that hot. But even if it's just a half or 1% versus being charged 10%, that's a swing. And the Money Max figures that out. And that's why oftentimes checking and savings is faster than checking and the line of credit. Okay? And so here you're seeing a transfer. Blue is an accumulation. We're taking idle money from the checking and putting it in savings. Then anything blue-green, and there's one there. And if we look down here, oh, look, there's another one. This is another blue-green. Here again, this is a debt payment. The system's figured out we got money in banking, and we need to put it on this debt. And it's telling you how much to the penny and on what day. It's figuring all that out for you, okay? So I wanted to highlight just this idea of what's velocity banking, and two, well, should I get a line of credit and use it? Number one, get a line of credit? Absolutely. It's a good financial tool to have, whether you use it or not. Because you could have a $100,000 line of credit, not put a dollar into it, and it doesn't cost you anything just sitting there. But it's available. And so what some people are doing is getting that line of credit established, and they're looking for rental properties, and they're pulling out, whatever it is for a down payment, getting a mortgage. And here again, do a what if scenario. Yeah, what if I do that? And again, how do you do that? You just say, what if? Well, go to the accounts tab. What if we put in a new mortgage, a rental property. What will that do to us? And you can see, what are the terms? What's the amount you're financing? And then you figure out, okay, what's the payment? What's the escrow, total payment, escrow, all that. And then you say, well, what can I rent it for? And see what that spread is. Today I helped a new client, 3 properties, $775,000 in debt. She Her latest property was 30 years, so they were all between 26 and 30 years. She's done in, I have it here. She's done in 9.3 years. She thought 30, and she's done in 9.3, and you guys have had very similar experiences, and she's going to save $339,000. Now she's on the West Coast. She bought a house in Iowa. And I said, well, I showed her on a scenario, well, what if you did that again? $200,000. And you know how far it pushed her back? Because she had 3 properties, a car loan, and a little bit of debt, 775,000, but she added $200,000 to it. And her original, she's done in 9.3 years. Her new payoff, if she did that, was 10.2, meaning it didn't even push her payoff date back a year. And now she has another rental property. So you see, what the Money Max can do for you is assist you in building wealth. And there's a lot of different ways that can happen, okay, using this tool. And a lot of homeowners are now able to see and to think about building a portfolio, okay? So I wanted to present this to you, just give you some background. Again, settings, preferences, which way do you want to go? Checking and savings. Most people look at this and they are kind of, I was going to say hell-bent, but not hell-bent, but really insistent on using the velocity banking system, the setup with the line of credit. I totally get that. But when they see this, and that's what the Money Max does, is give you information. Do you really want to pay on your debt 2 more years than you have to? You don't have to, because here's a good alternative. And you get to decide. Okay? All right. So I hope you found that helpful. We've got some time here. Let's open it up for some questions. Karen,
Bill,
if
I
you would
have
raise your
one.
hand. Yeah, go ahead.
If I was just doing this as a projection, I put in the line of credit, I figured out how big a line of credit I would have to have.
Mhm.
What if I then decided, okay, I don't have a line of credit, I got to get rid of it? What would I do?
If you don't want to do this,
It was just a projection.
edit. The savior right there. Delete. Yep. Bye-bye. It's gone. Now you're back to where you were. The nice thing about this system, just like with this lady earlier today, our new client, and I showed her the what if scenario, putting in, a new rental property. Oh, you don't want to do that now? No problem. Click, delete, boom, resets. Period. That's the beauty of our system, is that it can reset. And here again, if you ever get yourself into a situation where you go, man, now what do I do? Right here. What you do is you call home office, and somebody's going to jump on with you, and somebody's going to help you. Okay? That's that number, the 877-676-5638. That's the key right there. Um, a lot of us agents uh, have a lot of knowledge, but I'll tell you that typically the corporate trainers are deeper and they're more readily available. If you called me and Tom, is Tom here? Let me see. He was here earlier.
Yeah.
Tom called me like right before we're going to go on. He says, "Hey, can you, send me my link?" And it was like, I don't know why I answered, because I'm getting ready to go on, and I answered, and that's kind of a fluke. We typically are busy 8 to 10 to 12 hours a day. Corporate, the training staff, they're there, and there's a bunch of them there. And yeah, there might be a little, 3, 4, 5 minute wait, but somebody, when you're in queue, they're working hard to get to you to get your question answered. Okay? Utilize the support line, all right?